This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios as always. I'm Prashant. With me, my colleague Sonia, and Surbi is with us as well. It's a pink Friday, right?
Pink of health. I don't know if you can say that about the markets.
I couldn't resist that.
But you know, it's bright smiles this morning because finally it's Friday and finally we made it, right? Another week comes to a close. And somehow, I mean, this week felt rather long because of the way the market moved. It was so volatile and we came off from our highs. So in a sense, thank God it's Friday.
Always. Always thank God it's Friday. Well, you know, let's just kick off with what you need to know as we begin another trading session, right? Now, you may look at the last two sessions and say that the market has been sulking, but is that so? Broader markets are doing just fine, even as the Nifty and the Bank Nifty are sulking. And just take the last two sessions worth of change. The Nifty is down 1% in the last 2 days, but the Bank Nifty is down 1.6%. But look at the small cap index, it is up 2%. So the broader market is powering ahead, even as the large cap frontline indices, for one reason or the other, has been sulking. Focus on individual stocks, and we've been making this point over and over again, and not on the broader indices for the last at least 2 weeks or so. That has been the case. Broader indices need one or two large stocks to fire, if not a whole bunch. But the action beneath the surface in single stocks has been nothing but extraordinary and backed by volumes as well. That's an important point. Not just price action, but volume-led as well. We'll talk about many of these stocks before markets open. Let's just a quick word on the global cues as well. They're positive, global cues. Techs are the clear leaders. I mean, when I say technology stocks, I mean basically 6 or 7 stocks. And we put this data out yesterday, day before yesterday out as well. Basically, about 6 or 7 stocks are responsible for all of the US market gains this year. And last night was no different. The Nasdaq ended 1.25% higher. Good news, dollar is cooled off a little bit. So, there's an important zone which is between 103.8 to 104. It's an important support area. And we slipped. I mean, after getting to about 104.7 2 days back, we are under the 104, 103.8 levels. Watch for the weekly close. For the dollar index, it's always the weekly close which matters quite a bit. And, if we have a close around these levels a little lower, then that's going to be good news for the medium-term trajectory for the dollar. We get the US jobs data later today, and I think that will be perhaps the most important for markets to get a sense of what the Fed will do. By the way, last night, once again, we had speakers from the Federal Reserve reiterating that they would like to see, or at least they would lean towards a pause. But that's commentary, right? We've heard that for 2 days now, yesterday and day before. We had maybe the ISM manufacturing data came out last night. That was perhaps relatively also on the weaker side. But other indicators have been strong. The one single pain point is basically the labor market, which is strong. And I think tonight, out of the US, we get perhaps the most important data as far as the labor market is concerned. Coming back to the market here, just if you're looking at the Nifty on the downside should not breach 18,420 levels. That should be defended. The 20-day then comes in even lower at 18,338 if the uptrend is to be intact. The upper end of the rising channel stands at 18,800. That's about 300 points away from where we left off yesterday. So that's some distance away, but that's basically the meaningful kind of level to watch out for. And then, of course, it's the all-time high, another 100 points above that. Bank Nifty yesterday managed it. By the way, it breached the 20-day moving average. Intraday, it breached that. But by close, it closed above the 20-day. That number stands at 43,751. And that remains and becomes the important level, which the Bank Nifty must not close below. On the way up, a move above the high of 44,499 will signal more upside. So that's basically some levels if you're trading near term, both for the Nifty and the Bank Nifty, and how you should approach things. I think SGX is indicating a strong start, about an 80-point higher start. We get into these phases, right? The market moves up quite a bit, it cools off, moves sideways a little bit. I'm talking about indices here, and then we have a renewed push again. The broader takeaway has been that this is, whenever we see these pullbacks, it is within a broader uptrend which has not been violated as yet. Sonia.
Oh, absolutely. And, it's a very volatile market, but within largely a trading band, right? I mean, we haven't been able to break that upper end of the trading band, which is 18,600. This morning looks like it's going to be a very good start. The SGX Nifty is now at the highest point of trade. And as we've been telling you, it's largely the global markets that will aid the sentiment today. But the big question, the million-dollar question is there anything to take the market out of this 18,600 band? That is something that, remains questionable and doesn't look like it could be the case as of now. But for today, we work with positive cues. The US jobs report, this could be the lowest monthly gain in jobs since December of 2020. 190,000 job additions is what we're looking at, but it'll give us some hint on what the next course of action will be from the US Fed. Now, the flows continue to be on the muted side. So after 8 days of buying, FIs have finally sold in the cash markets about 71 odd crores, while DIs have bought about 500 crores. So flows have also become a tad bit muted. I'm watching out for a couple of things in a couple of economic indicators. One is that two-wheeler makers have reported quite a decent set of numbers this time. So, add that to the list of positives along with, say, the pickup in GDP and the PMI data, which has gone up, GST collections. Now, two-wheeler sales have also come back. So, it's 7% growth for Hero Moto, TVS Motor up 9%, Royal Enfield up 22%. But the pocket that has gotten hit is commercial vehicles. And over there, Tata Motors could be under pressure today because of a double-digit fall that they've seen in their CV sales. So that's one thing that, the market could be a bit cautious on. But, Surbhi, this is a market that's kind of frustrating, right? Because at no point in time are you getting any indication that we could break out of this range.
Yeah.
Today, of course, start will be in the green, but then again, you have that resistance.
And that's what I'm saying, that it's so near yet so far.
Yeah.
It's just a psychological level, the all-time high. But the fact that we have taken so long to climb 1.5%, for me, there are certain underlying factors that indicate that there's a hint of cautiousness in the market. And we are seeing that play out. Now, macro data, especially in the US, has not been the best. But equity markets can stay completely disconnected from macros for long periods of time. In fact, weak macros end up being positive for the equity market. And we've seen that play out over the last many years. So the dollar drop that Prashant alluded to as well, that was the biggest drop we've seen in the greenback in one single month. Suddenly from levels of 104.5, we're down to 103, 103.4 or thereabouts. So that's one. The US manufacturing data that came out, 7th straight month of contraction in the US manufacturing PMI, the ISM manufacturing PMI that came in, a level of 46.9. So 7 straight months of manufacturing contraction in the US. And the jobs report today, the figure is 190,000. That's the expectation. But again, it's a telling story from highs of almost 250,000 and plus above that. We're looking at a number that, if it comes in around this mark, it would be the lowest in the last many years, lowest since December 2020. For the Indian market, once again, it was quite interesting to note that global markets were doing really well yesterday. Europe was up and about at the time when we fell, and we gave up a lot of gains in the last half an hour. So that's something that you can't exactly write off. Even this morning, I mean, look at Hong Kong. Hong Kong's up 3%, by the way, trying to make up for a lot of the lost ground yesterday. Very strong, momentum in Hong Kong and even in mainland China. That's the way some of these markets are trading. But will it rub off on us? Can we, get over this wall of worry around 18,600? That's the big question. Another data point that I want to talk about is the FII long-short ratio. And the FII positioning is coming, is becoming a little more cautious. That's what the number tells you, because we're down to below 54 versus 60.7 just a day back. So the FII positioning in the FNO market is a bit cautious. And even in the cash markets, I mean, that number yesterday is a small sale number. So nothing much to worry about. But the fact is that they are net sellers after a massive May. That number, the net inflow number for May, is the highest that we've seen in this calendar year. So one critical question is that we've heard a lot of talk on FPI regulatory scrutiny being enhanced. The SEBI consultation paper, I mean, there are reports this morning indicating that some of the custodian banks could already start seeking additional information from clients coming in, especially from Mauritius. Because remember, Mauritius might just end up being classified as a high-risk jurisdiction. So these are some of the factors that we have to look at, whether in the interim, as these adjustments happen, whether there might be a bit of an impact on FPI flows. So I guess I would say that beneath the surface, the sense that I get is that there's some skepticism and caution in the market.
All right. Well, 80 points higher on the SGX this morning, at least. It's going to be a good start. That's the SGX for you. Well, before we go any further, let's quickly tell you what's lined up in the first half hour of the show. We get you updates from markets across the globe. Jahangir Aziz of JP Morgan will be with us with his take on how things are looking. That should be an interesting conversation. We get you CNBC TV18's list of top 10 stocks for the day with our research team. At 8:30 this morning, we'll have Gurmeet Chadda of Complete Circle Consultants with his thoughts on the market.
Okay, we have a long lineup of guests joining us in just a while from now, so don't go anywhere. But on the equities front, first up, we have Chris Wood of Jefferies, who says that greed and fear is very overweight on the Indian lending sector in the Asia, ex-Japan and global long-only portfolios. And the sector accounts for 32% of the India long-only portfolio, 19% of the Asia ex-Japan long-only portfolio, and 14% of the global portfolio. Now, this compares with the lending sector benchmark weighting of 3.9% in the MSCI All Countries Asia ex-Japan Index and 0.37% in the MSCI All Countries World Index. Now, this calls for a further adjustment in greed and fear's long-only India portfolio. An investment in AU Small Finance Bank will be initiated with a 3% weighting, which will be paid for by removing the investment in CAMS. This raises the lending sector's weighting in the portfolio to 35%. Interesting. So they're adding AU Small Finance and they're removing CAMS from their portfolio.
All right. Well, that's always an interesting note, the greed and fear note from Chris Wood. Some money market views as well. This is on the rupee. Lakshmanan V of Federal Bank says that despite dollar index at around 2.5-month high, rupee soared to a 2-week high yesterday on the back of strong domestic GDP data, complemented by manufacturing PMI, which came in at a 2.5-month high. Most of the major currencies were seen struggling against the dollar, with the Chinese yuan and Australian dollar trading at 6-month lows. All eyes are now on the crucial unemployment and non-farm payrolls data due later today, which will be key for upcoming FOMC due on the 14th of June. He expects the rupee to trade in the range of between 82.2 to 82.78 to the dollar for the next few trading sessions.
All right, and on the bonds, Lakshmanan V says that the bond market saw sustained buying interest through the week with good volumes. Lower US yields also aided to the sentiment. Buying momentum is expected to continue, and if the market breaks 6.97, he expects a sustained rally to 6.92% before the RBI MPC decision, which is due next week.
Okay, well, we also have lots of stocks to track and plenty of action to look at today. In just a bit, in our top 10 segment, we're going to be looking at names like Hero Moto, TVS Motors, Ashton Motors, Bank of Maharashtra, Aditya Birla Capital, Coal India, Moil, Aster DM and NHPC. All those on the back of positive news flow. Tata Motors, actually, because of its sales numbers, is the only stock that's on the red side of our tally today.
Okay, well, Jahangir Aziz is now joining us, Head of Emerging Markets, Economics Research and Commodities at JP Morgan. Jahangir, great to have you with us here. Thank you very much for your time. We got the... let's just start with India, not the global, flipping it upside down. The GDP numbers here, right, which came in much better than expectations. And mostly the street is up their forecasts for the full year on the back of what we've seen. That is one. Other indicators like GST collections, we are done with the fourth quarter earnings season. It's still, I would say, a mixed kind of quarter, but it is better than the third quarter. What's your assessment overall as you see things?
So I think, India falls pretty much in what we've been seeing in emerging markets generally, right? So if you look at, Brazil came out the day before India came out, and Brazil's first quarter was 8% quarter on quarter. So you are seeing this very strong and I would say underappreciated resilience in emerging markets. And this has been happening through 21 and 22. And I think that underappreciated resilience is the fact that the private sector went into this post-pandemic period relatively under-leveraged compared to the previous periods. In addition to that, there is still a lot of excess savings sitting post the pandemic with the balance sheets. Now, in the case of emerging markets, including in India, most of that excess saving is sitting with the corporates and not with the households, while in the developed market is sitting with the households as well as in the corporates. So I think there's a lot of resilience in these economies. And so, the kind of calculations people made saying that, emerging markets have raised rates 200, 300, in many cases, 1,000 basis points. That kind of rate hikes necessarily will have to get domestic demand down, and therefore we are going to see a terrible 2023. Well, that hasn't happened so far. Just as a way of comparison, in January we expected first quarter for emerging market ex-China to be just 2% quarter-on-quarter annualized rate. We are now clocking around 5.5%. So I think India falls part of that story, and there are idiosyncratic things that you can point to. In India's case, where it's an outsized export growth that took place. In the case of Brazil, you'll say, well, there was a massive bumper agricultural crop, and so there are all of these idiosyncratic stories. But if you step back, for the last 2 years, emerging markets have shown a remarkable resilience, particularly compared to, if you recall, what happened in 2013.
Sure. Jahangir, hi, good morning. The dollar is on track for its worst loss that we've seen in nearly a couple of months now, nearly 2 months now. And there's now increasing chatter that perhaps the Fed may skip this time's rate hike, rate hike in this policy, and perhaps move it to the next one. What's your own assessment of which way things could head? And in terms of a timeline, when are we looking at the signs of a first rate cut from global bankers?
I can tell you the last one, long time. So, just look at what's happening to the economy. This economy in the U.S. economy, right? So the U.S. economy in the first quarter clocked 1.1%. And we all said, that's a terrible number because we were all expecting 2.5%. But look at the details. You had domestic demand or final sales, ex inventories running at 3.5%. You had 2 straight months of inventories being reduced. So in this quarter, the U.S. economy's domestic demand or the final sales demand is running around that 3.5%, whereas there is very little stocks. Look at the PMI. You spoke about the PMI, ISM manufacturing PMI number. Look at the details. Inventories at an all-time low. So I think that we are getting into a point where employment demand continues to remain very strong. The JOLTS numbers was almost job openings that came out, I think, day before yesterday, was 1 million more than what was expected. The number of vacancies to job opening ratios it still remains about 1.3, 1.4, and most likely after 13 months of being surprised on the upside, most likely tomorrow's non-farm payroll number will probably repeat the 14th month of being surprised on the upside. So I think there's a lot of strength in the U.S. economy, and consequently, the Fed most likely will pause, which is what our baseline view is. The market had expected, the Fed to actually raise, and then after the, pre-meeting signals sent both by Jay Powell as well as by Vice Chair Jefferson, the market is basically looking at a, much lower probability of a rate hike in June. But I think, the pause is going to last for a very long time. I'm not so sure we're talking about a skip in the sense of, skipping just one meeting. But I wouldn't be surprised that the Fed remains on hold for a significant period of time.
That's quite interesting, Jahangir. Good morning. So from what you say, the U.S. economy doesn't seem to be in a troubled spot at all. Looking at the internals, I mean, we were looking at the headlines, but thank you for pointing out the internals as well. Let me then dial back to India and this extremely strong number that we've got on GDP that's surprised. And we were looking at auto sales. I mean, most of the auto sales numbers are above estimates as well. So how do you expect, let's say, the second half of the year to play out for India? We've seen bumper FPI flows in May. Perhaps could we see more of the same in the second half as well?
So, let's step back and look at, what were the big drivers? What were the big surprises? Not the big drivers of growth, but what were the big surprises? The big surprise clearly was exports, followed by the fact that we not only had the central government capex being higher than what was budgeted, but also the state government this time around actually did some work and put in some more capital expenditure, right? So as far as the capital expenditure is concerned, if you look at the budgeted numbers, I don't think that is going to flag off. What is really concerning is that, that pickup that we saw in exports of services and goods, that's where really the challenge is, because the global economy is slowing. Despite the fact that, the US economy is surprising on the upside, it is surprising on the upside because we do expect it to slow. It is just not slowing as much. If you look at manufacturing, you spoke about that the 7th straight month, you have the ISM manufacturing index slow down. Look at what's happening in Taiwan in terms of actual industrial production or the bellwethers of the manufacturing global cycle. All of them are showing that manufacturing as the driver of global growth isn't doing very much. In fact, it's doing the opposite. Now, we are expecting the fact that, final demand is so high in the US and there are no inventories, that at some point in time, in the next couple of months, we are going to see a turnaround in manufacturing. But so far, the global economy is essentially is being driven by services. And that's where India is not that strongly connected to the global economy. It is to the services exports, but we know that's much more linked to specifically to the tech sector, etc. So I think that's where the concern is. The concern is that the global economy slows, and with that, export slows, and rather than 6% this quarter, moving towards 7 or 7.5, which many people in the market have. We have a view that you're probably going to see growth slowing down towards the 5 handle. In fact, for 2023, 2024, we have raised our growth forecast after the 6.1% surprise from 5 to 5.5%. But it's very hard to see that number being realized without significant support coming from the global economy.
Jahangir, just one last point. This is... you can choose to answer it or not. The US index, right, has been led by just 6 stocks. I was looking at data. 6 US stocks are responsible for a full 100% of the S&P's 10% gains this year. Right. About 70-80% of the Nasdaq's gains this year. And this is all led by the AI sort of revolution, which perhaps will happen. Is it a fad which will fade, or is it here to stay?
Look, I'm the wrong person to answer that question.
I know, but what's the house view? Is it...
The house view has been that we had been negative on U.S. equity right from the beginning of the year. We did not expect this sudden burst of these 5 or 6 stocks. We are actually looking at just 5 stocks to rally the entire index. We do expect this, rally not to last very long because, as you pointed out, the 495 stocks of the 500 S&P 500 are basically skating water at this point in time. But that's the house view.
Skiing. Racing ahead, and what a rally they've seen. Who would have thought, right? The Nasdaq is up 30% this year, Jahangir, and we're not done with even half the year. It's a fantastic performance.
Absolutely. That's what technological breakthroughs and surprises do to you, right? Absolutely.
Yeah. We'll leave it there, Jahangir. It's a great chat as always.
Sure.
Thank you very much for your time. Appreciate it here on CNBC-TV18. We'll take a very quick break here. We're back. Our list of top stocks to watch for the day. Our research team will be with us to get you that in just a bit.
दुनिया में कुछ लोग कहते हैं और कुछ लोग करते हैं। जब कहा गया देश में सोलर पावर सफल नहीं हो सकता, तो हमने सुना नहीं, उसे सफल कर दिखाया। कहा देश का सबसे बड़ा पावर प्लांट बनाना इम्पॉसिबल, तो हमने पॉसिबल कर दिया। बोला कोने कोने तक बिजली पहुंचाना किसी के बस की बात नहीं, हमने पहुंचा दी। सवाल उठे एनवायरमेंट फ्रेंडली गैस सब तक कैसे पहुंचेगी? हमने वो भी पहुंचा दी। कहा तो ये भी गया पैकेज फूड बिजनेस हमसे नहीं हो पाएगा, लेकिन हमने कर दिखाया। बातें उठी सीमेंट सेक्टर में हम कभी स्ट्रांग नहीं बन सकते, तो हमने सुना नहीं, बन के दिखाया। चर्चा हुई देश में इतना बड़ा पोर्ट बनाना असंभव, हमने संभव कर दिखाया। और जब कहा गया देश के एयरपोर्ट्स इंटरनेशनल स्टैंडर्ड्स के नहीं हो सकते, तब भी हमने सुना नहीं, कर दिए। मुश्किलों की नहीं सुनते, हम करके दिखाते हैं। अदानी, हम करके दिखाते हैं।
I'm a chameleon. It's my job to change color. But your wealth manager, well, they shouldn't be copying me, you know. You know that. Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
Okay, I think we're getting the news, which should be out on the ticker as well soon. It seems the grand debt ceiling bill has also been passed by the Senate. It was only a procedural because there is a Democratic control over there. Yeah, there we go. U.S. Senate clears the debt ceiling bill, so all of that is behind us, and pretty much this entire imbroglio is a thing of the past now, which has been the situation and the case for several years. Almost on a yearly basis, we see the same drama play out, and then they finally go through and push the limit higher.
It's
so anyway,
almost like they cry wolf, right? I mean, just to state facts. And this was expected to be the first ever debt default. And finally,
how many times have we heard that? Have we heard that cry before? And then it kind of settles down, and therefore markets taking it in their stride. Speaking of markets, very, very strong rally playing out across Asia, which is helping the SGX Nifty clock solid gains, about 80 points higher the last time I checked. So, yeah, looking pretty good. The SGX suggesting that we'll have a 0.5% gap up straight away at the open. So now let's dial down to stocks. Our team is standing by, as always, with the CNBC-TV18 list of top stocks to watch today. So I have to start with the residual auto numbers that came out. Almost all two-wheelers good, right? Barring their exports, but largely a good picture?
Yes, a good picture, absolutely. The one thing that stands out is across the board in the two-wheeler space, you've had a good recovery in domestic sales, although exports continues to be under pressure. But even on exports, we've seen a sequential recovery for most of the auto players, and the dispatches have been quite good across the board. So let's start with Hero MotoCorp, where total sales largely in line with expectations. A 7% growth is what we've seen at 5.19 lakh units. TVS Motor, total sales growth of 9%. Royal Enfield has seen a 22% sales growth. In fact, this was better than expected. So I'm expecting the Eicher Motor stock to be in the green because of very strong sales coming through. However, the one stock that could be in the red this morning is Tata Motors. That's because there is weakness in the commercial vehicle sales. If you look at it, a 12% knockdown is what we've seen in Tata Motors CV sales. The passenger vehicle sales has also slowed down to low single digit. So PV sales are up just about 6% or so. In fact, we will be speaking to the management of M&M to talk about their auto sales at 9:40 a.m. on Bazaar today. So do stay tuned in for that.
Okay, well, that's basically the lineup that you will see on Mahindra. Interesting conversation as always. Well, let's move on. Abhishek is joining in. AB Capital will be in focus, and Bank of Maharashtra. Abhishek reported yesterday that Bank of Maharashtra will see a QIP, and that's come through. Abhishek, tell us more.
Well, Prashant, yesterday we did break that Bank of Maharashtra is looking to raise capital via QIP, and that news has come true. So the base issue size is, as per our news break, about 500 crores, which can be scaled up to about 1,000 crores as per the demand. So what I'm getting from sources is that the demand could be around the 750 crore mark. Indicative price is about 28.5 per share, which is a discount of close to 5% to the floor price. We did mention that, there will be a discount of up to 5%, and that has come true. The BRLM or the brokers to the issue are Motilal Oswal, SDFC Securities, Bob Caps, IDBI, as well as Systematic. So calculation shows that the net worth can increase by 6.5% to about 16,610 crores. Equity dilution is about 5.2%, and book value can increase by over 1% to about 23.5 per share. Tier 1 ratio, that increases by 89 basis points if at all they raise the entire 1,000 crore to about 15.1%, and Government of India's stake can come down to 86.5% from 91% that they hold right now. Now, Aditya Birla Capital also is raising fund. They have an approved, for preferential issue to the promoter and promoter group company. Total fundraisers of about 1,250 crores. So they will raise 1,000 crore from Grasim and 250 crore from Surya Kiran Investment Limited. So equity dilution is about 3.1%. The stake increase, Grasim stake can increase to 54.9% from 54.15% that they had earlier. And Surya Kiran, their stake can increase to 1.5% from a little under 1% that they had earlier. Back to you.
Okay, thanks a lot for that, Abhishek. Let's go across to Vivek now. He has some more stocks that are in the news this morning. Vivek, over to you.
Well, good morning. I'll start off with Coal India. The large OFS over 4,200 crore worth of OFS. Now, the non-retail portion, the base size has been fully subscribed, oversubscribed, in fact, at 3.46 times. So now the company has decided to go ahead and exercise the green shoe option, and today retail investors can bid as far as the OFS is concerned. Keep an eye out for MOIL as well, manganese ore. Yesterday, the company went ahead and increased prices of certain grades of manganese ore. Today, the company has given production as well as sales update. Strong numbers coming in there. Production of 1.53 lakh tons, up almost 43% on a year-on-year basis. Monthly sales is up almost 72% on a year-on-year basis. Keep an eye out for Aster DM Healthcare as well. The company has gone ahead and entered into a hospital operation and management agreement. This is with Padmavati Medical Foundation, and the hospital that they're talking about is a 130-bed tertiary super specialty hospital in Kerala. Lastly, a very interesting development in NHPC. Now, the company has entered into a memorandum of understanding with Vidyut Utpadan Company in Nepal. Now, this is for a hydroelectric project of almost 480 megawatts, and this will be in Nepal itself.
Okay, thanks a lot for that. Well, let's do a quick recap of our top stocks with positive news flow. There's Hero MotoCorp, TVS Motor, Eicher Motors, Bank of Maharashtra, Aditya Birla Capital, Coal India, MOIL, Aster DM and NHPC. While Tata Motors is the only stock on our radar with negative news flow because of the fall that we've seen in the commercial vehicle sales. All right, well, let's find out what's happening in the world of commodities this morning. Manisha Gupta joins in for a roundup of all the action there. Manisha, good morning.
Morning, Sonia. Thank you for that. With the steepest fall in dollar in 3 months is what we witnessed in the New York session yesterday. With that, there is support coming in from most commodities. The crude oil prices gained 3% overnight. They're trading 0.5% on the higher side even now. Apart from the decline in US dollar, the US set to suspend the debt ceiling till 2025 really did the trick, and we are looking at support because of that as well. The markets also believe that the global demand for crude for the month of June could jump to a record 102 million barrels per day, and that clearly is back supporting the crude prices. But not just that, metals also have firmed up ahead of the U.S. non-farm payroll data. So copper is up 1% overnight. Even the gold price is trading at $1,980 an ounce. We also are looking at zinc, aluminum, which are facing smelter capacity cuts in Europe and China, getting support. So most of the commodities trading in the green in the Asian markets right now.
All right, Manisha, thanks very much for that. We take a quick break here. Gurmeet will be with us of Complete Circle Consultants in just a bit. We put some specific stocks to him. A little later after that, we'll have the management of Kaplan Point Labs to talk about their fourth quarter earnings and outlook for FY24. There's some news flow there as well, which we want to address. Stay tuned.
आ गई
मम्मा और कोई ऑप्शन है क्या?
मम्मा
लाइफ में और कहीं ऑप्शंस मिले ना मिले, मोतीलाल ओसवाल आपको देता है ऑप्शंस ट्रेडिंग में ऑप्शंस। इंट्रोड्यूसिंग मोतीलाल ओसवाल ऑप्शन स्टोर विद अ वाइड रेंज ऑफ ऑप्शंस इन ऑप्शंस ट्रेडिंग। एक्सप्लोर करो ऑप्शन स्टोर। Investment in securities market is subject to market risks. Read all the related documents carefully before investing.
This car's electric for more reasons than just being woke.
Oh yeah.
And man, the money it saves you is no joke. It's got enough range to get you anywhere!
And it's the go-to park when you get there.
The all-new MG Comet EV, the no-nonsense car.
Because just like us, this car cuts the crap, man.
तू है तो मुझे फिर और क्या चाहिए, तू है तो मुझे फिर और क्या चाहिए।
खुल जा, ओपन ओपन, खुल जा डिमसम, खुल जा दरवाजा, खुल जा। चाहिए सोना तो इतना हैसल क्यों लेना? माई डिजी गोल्ड ऐप फ्रॉम सेंको गोल्ड एंड डायमंड। सोना खरीदो, बेचो या रिडीम करो, कभी भी कहीं भी इंस्टेंटली। डाउनलोड माई डिजी गोल्ड ऐप नाउ।
नई कार, तुमने कार इंश्योरेंस खरीदा होगा एगो ऐप से, नहीं?
आपको
नहीं?
नहीं तो
कोई बात नहीं मूर्ति, गलतियां होती रहती हैं, कोई जरूरत नहीं है चेक करने। नहीं मूर्ति, कोई फायदा नहीं, कोई जरूरत नहीं।
नई कार खरीदने से पहले एको चेक करें और 36,000 तक बचाएं।
Welcome back to Bazaar Morning Call. It's the last day of the week and we have Gurmeet Chadda of Complete Circle Consultants joining in now to tell us how to prep for the next few months. The month of June has begun and Gurmeet, thanks a lot for joining in. Welcome to the show. This year is going by really fast and give and take everything, it's not been such a bad year. I mean, so many stocks have come back in big ways. The market is virtually at all-time highs, which is a great place for the bulls to be. But from here on, how do you approach the market? What are the stocks that you still like? And what do you do now? Do you raise cash levels or do you continue deploying?
Thanks, Sonia. See, I mean, how many times have we seen that, right? All negative news, debt ceiling, inflation, everything. You have to be in it. I mean, if you just miss the 6-7 best days in the market, your returns for the year are probably reduced by half. And you probably, if you miss the 10 best days, you probably, returns happen. There are so many data points to prove that historically. So I think, but the stance probably has changed. What we saw last year was a sell on rise. I think what we are probably witnessing, maybe I'm a little early saying this, is buy on dips. And I think the earning Q4, in my view, with the some exception of IT, was actually better than what everybody went in. And I think that's what has led to some. Plus, I think the FI flows have come back. So since 27th of April, I think it's been quite more than 30,000 crores of flows, which we haven't seen for a while. So I think that we should not ignore. My sense is that you have to be careful of valuations because the rates are still high. And I think and they're not going to come down in a hurry. You might see a little bit of a pause in the hiking cycle. So I think play the commodity consumers more. I think that's where you probably see, earning expansion and margin expansion. So cement, for example, Ultratech mentioned that March was 100% capacity utilization. Not seen that in a long while. Even Shree Cement pointed to high capacity utilization. So players who are debt-free have the ability to raise capacity. If volume growth picks up, are something I think should do well. Maybe lower, you can look at something more mid-caps like Sagar, Ramco, etc. Also, I think, banks, in my view, will continue to have good momentum. I think the credit growth is strong. And what I'm most impressed is with this capital formation. If you see the Q3 GDP, Q4 GDP print, it talked of some 8.9% capital formation. So I think this investment cycle is here. And I've been making this point, these cycles are much longer. It may not be as ferocious as what we've seen in 2003-07, but this looks like pretty structural to me. So just be careful of valuations. I think don't just get carried away and just take it as it comes.
No, absolutely. Gurmeet, hi, morning. Yesterday we got news that Foxconn is going to be making in Karnataka as well. I mean, they've, I think, broken ground. They've already, of course, operated out of Tamil Nadu. Telangana, they've broken ground, and I think Karnataka, they're saying by April 24 they'll have operations up. So yeah, I mean, that make in India and manufacturing is, you're seeing that, I mean, actually, with announcements, etc. Gurmeet, I saw a tweet from you saying that you convinced your building security guard to start an SIP for his daughter's education. It was heartening to see. And I was wondering that the broader implications of what we are seeing, which is this increasing financialization, this can be with us for many years to come, right? There's this broad wall of domestic money, and we occasionally tend to underestimate it. But if that is a structural thing which is going to be there now, which was not there 10 years ago, even 5-6 years ago, I mean, then the way to approach things has to be very different in that sense. I'm not saying that it's going to be a one-way move, but it's an important trend, isn't it?
Oh, absolutely, Prashant. And despite look at NSE started at 1,000, we are at 18,000 plus. Sensex is 100 to 62,000, and we only have 3 crore unique investors in SIP and about 4.5-5 crore overall in equity. I was looking at some online gaming apps, cricket apps like Dream 11, etc. I have 11-12 crore users, unique users. We saw crypto users crossing 11 crores at its peak. We have 6 crore people playing online rummy and all sorts of game, and you have the best asset class, which probably has. So I think probably this will grow, and that's the reason I think we have been constructive on, some things like CDSL, NSE in unlisted space, and you just play that. Look at the credit creation which is happening. Look at some of the niche players who are now doing credit creation, whether it is Equitas, Credit Access, Grameen, 5-Star Fusion, a lot of players, and people who had no access to credit. HDFC in its call mentioned that there are 45 crore people more which are still not part of the financial formalization in terms of credit, and I think that is coming from HDFC. So I think this trend is secular. Only thing, as I said, you have to be mindful of players who grow very aggressively, right? And when they grow aggressively, initially you get valuations. So we saw that with CDSL. The valuations, just people assume that we'll just keep adding 1 crore users every 6 months. Only thing we have to be just careful is valuations, as I said earlier to Sonia also, and just play it more structural, and expectations have to be more moderate. I mean, it's just that we can't just make money month on month and quarter after quarter.
Okay, got to be patient. That's the name of the game, and that's a commodity that's always in short supply these days, isn't it the case, Gurmeet? Stay on. We'll have more questions for you in just a bit. We'll just quickly get into our first corporate interaction of the morning as well. It was quite a strong top-down performance coming in from Kaplan Point in the fourth quarter. The company recorded expanding margins, and not just that, a 67% very strong growth in the US market. In other news, their sterile injectables unit has received 4 observations. We have with us Vivek Parthiban, COO of the company. Vivek, good morning. Thanks for taking the call. Before we talk about what looks like a very strong year and a very strong quarter for you, just want to get this bit out of the way. These 4 observations, I believe they're procedural in nature, but could there be any material impact? What exactly is the FDA saying? Could there be any threat of escalation whatsoever?
No, we strongly feel that these are procedural in nature, and while FDA doesn't exactly consider them as major or minor or anything like that, these are nothing to do with repeat observations or data integrity or anything like that. Obviously, we've not had an inspection in the last 4 years, so we can't expect to have 0 observations at all. But we feel fairly confident, we feel very comfortable that we can respond to these on time and get the EIR out on time as well.
But do they impact your output from this unit in question at all?
No, nothing at all. There is absolutely no material impact, or there is no impact on any sort of revenues that come out of this plant.
Okay, that's great to hear, and I'm sure that's some relief for your shareholders as well. Good morning. I wanted your thoughts on what's happening with the US markets, because the growth has been very strong over there, almost 67% this time, and you've achieved an EBITDA break-even as well, so good on you for that. But can you tell us how many drugs has the company filed in the US so far? What is the run rate in terms of approvals that you're expecting? And given the visibility that you have of a strong order book, what is the kind of revenue run rate that one can expect?
Yeah, so we have, as on date, 23 products that are approved from our site, of which 18 are in Kaplan's name. We have another 8 to 9 products under active review with FDA at this point, and we should be filing another 12 to 13 products, I would say, in the next year to year and a half. Of course, obviously, it was a smaller base, but I think it was very heartening that we were able to achieve overall break-even on the plant at a PAT level. And given our run rate, and also given the approvals that are in place, and also the approvals that we're expecting over the next few quarters, we're expecting to show another at least 50 to 55% growth in the current year as well. So the public information that we've given out is that we're targeting around 300 plus crore in the current year from Kaplan Steroids.
So this 300 plus crores, something that you've spoken about earlier, you're holding on to that target for the US markets, I assume. So what would this mean for FY25? I mean, how can you build on to that? Is this 50% growth something that you can sustain over the next couple of years?
Of course, we don't want to give out too much information on year-on-year numbers. What we feel very confident about is 2 to 3 years hence. I think both our US market and also our parent company getting into the larger markets such as Mexico and some of these places that we are trying to get inside in Southeast Asia can become very interesting for us. I think 26 onwards, we can start to see a lot more momentum. Of course, we are doing well as it is, but for that next quantum level of growth, I think 25, 26 onwards is something that we can all look forward to.
Okay, you're saying that things will pick up after that. Good morning. Just a quick word on what the overall numbers may look like in 24. Revenues in FY23 grew about 15-16%. You did margins of about 30%, right? It came off a little bit as compared to 31% the previous year. What should we expect in FY24?
Yeah, we can expect similar kind of numbers. Of course, we are working off a larger base right now. But what is very important to consider is the fact that the company has grown significantly in how we have increased our cash flows. I mean, if you take the last 10 years, for example, we have grown from a surplus of 17 crore in cash to about 780 crore in cash. And this is despite a capex spend of about 650 crores in the last 10 years. I'm not even taking into account anything on R&D spend or anything like that. And we remain absolutely debt-free, right? And all of our capex expansions going forward, all of our operational expenses going forward also will be met internally. So this is something that we feel very strongly that the company is in a very strong position, and we will continue to grow in the same direction. Of course, when it comes to pharmaceuticals, the gestation period, whether it is regulated markets or semi-regulated markets, always is about 2 to 3 years whenever we enter a new market, right? So I think we need to be patient. But as I said originally, I think 25, 26 onwards, I think we can start to see the next quantum level of growth as well.
Vivek, could you quantify that? So you mentioned FY26 again. I'm getting a feeling that you have a number in mind. Or growth. Yeah, what? Sorry, go on.
So the public statement that we have made is that by 26 onwards, we expect to, of course, this I said it about a couple of years back. We expect the US market to hit 100 million in revenue in the next 3 years. And we hope to double our overall revenues from 2 years ago. So that's the information we've given now. But absolutely, we'll be more confident when it comes to cash flows and when it comes to remaining debt-free and working through our accruals alone. Yeah.
So FY26, Vivek, you'll do $100 million in revenues out of the US? FY26?
The US, that's the target that we've set.
And quantify that number since you gave this guidance out a couple of years ago. Where would revenues be in 26?
You're talking about overall company's revenues?
Overall, yes.
So yeah, like I said, about 2 years ago, I think we were about 1,200 crores or something like that. That's when we said that by 26 onwards, we expect to double our company's revenues. But like I said, this is a dynamic space, right? There's a lot of moving parts. We need to work within our means. We need to expand within our means. We need to make sure that we remain debt-free. All of these things are much more important to the company than the top line per se.
Sure, got that. So you're looking at doubling revenues by FY26, which basically could, take you closer to, let's say, maybe 2,500 crores. Just a question on the utilization of the cash, Vivek, that you mentioned. You did say that you have about 770 crores on the book. I think your capex plan this year is about 500 odd crores, if I'm not mistaken. How will you be utilizing the cash? Will it all go in the capex itself? Would you be looking at inorganic growth? These estimates that you've given us, I'm assuming all of this is just organic growth that you're talking about as of now.
Correct. So we're looking at only organic growth at this point. And of course, we like to remain comfortable. We like to remain, debt-free. We want to make sure that all of our capex, and of course, you need to also take into account that, some of these facilities that we're building will also start to incur OPEX in the next year or so. So we want to live within our means, and we remain fairly confident that we will be adding to the reserves as well, despite spending significantly on capex in the next 1 or 2 years. But at the same time, we will also not be against having some inorganic expansion if that presents itself. But it needs to fit in with our line of growth. It needs to fit in with our expansion areas and something that we are comfortable with as well. So we don't want to bite off more than we can chew. We already have quite a bit on our plate and we are moving in the right direction. We just want to make sure that we are ready for any sort of opportunity that presents itself.
Anything in your line of sight right now, inorganic, Vivek?
Nothing very large. It could be something small by way of an acquisition of API plant or something that that presents itself. But nothing
This
large.
year. Okay, but API plant perhaps this year.
We are still discussing. I will give you some news as and when I have any.
Okay, and this 550 crores of capex that you have planned, right? Would that put any pressure on your debt? I mean, are you planning to raise debt anytime soon, or will it be largely funded through internal accruals?
No, we have no debt on our books at all as it stands, and we have about 770 crore of cash. We continue to add 200 to 300 crores of cash every year. So considering that, we will very easily be able to complete all of our capex and ongoing opex as well for projects. Yeah.
Vivek, good luck. Thank you very much for your time here on CNBC TV18. We'll take a quick break here. Gurmeet is with us, and there is so much to discuss on the markets. We'll leave you with the SGX and how that is doing. 12 minutes to go for the pre-open session. We're back.
इंश्योरेंस कोई आरओआई नहीं है। एमएफ ईयर चेक कर, हाई होगा। क्या है?
आप बीपी चेक कीजिए, हाई होगा। हाई बीपी से सीकेडी हो सकता है और उसके ट्रीटमेंट से आपका टोटल लाइफ सेविंग्स खत्म। एसएचआई ले लो।
एसएचआई
स्टार हेल्थ इंश्योरेंस। अपनी सेविंग्स को बचाइए स्टार हेल्थ इंश्योरेंस के साथ। द हेल्थ इंश्योरेंस स्पेशलिस्ट।
CNG is good, but to get something, you have to give up something.
OMG! It's CNG! Big boot, big appeal, big reaction. OMG! It's the Altroz iCNG.
Shine on.
Yes, it's okay for us to nod for everything. Because we are parrots. Yes, but your wealth manager? Shouldn't be doing that. You know?
Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
Okay, welcome back. You're with us here on Bazaar Morning Call. We've got the SGX, which is up about 74 points at 18,637. Mitesh and Srikanth are with us with technical trades. Gentlemen, good morning. Great to have both of you here. Mitesh, back up again, at least going by the SGX. Is there a trade if we get a 70, 80 point higher start? And with stocks, what would you do?
Good morning, Prashant. I don't think I'll take a trade for the simple reason that my belief that the markets will be ranged and consolidated remains firmly in place. And therefore, if we open about 80 points higher from here, which I presume will be closer to about 18,600 odd levels, 18,650 is the upper end of the range. So I think buying there, I think may not make sense. And I'm not sure if, shorting will be very rewarding in a market which is contracting. So therefore, I think we'll avoid the indices. What could be interesting to watch could be the bank nifty. Now, between the nifty and the bank nifty, it's the bank nifty in the last 3-4 days, which has had a slightly bigger dip than the nifty. Stabilizing about 44,150 means that there could be chance of another 300 points on the upside. There, maybe you would want to explore a long push with a 70, 80 point kind of a stop loss, but that is something which will take a fall once the market opens.
Okay, Srikanth Chauhan is also with us. Srikanth, what's the sense you're getting about the index itself? Is there more upsides in store? Would you buy the dips now? And since you're at it, can you tell us about individual stocks as well? What are you looking at?
Yeah, good morning, Sonia. Good morning, Prashant. Yeah, I think, today, if we go through with the news flow, then it is like on the positive side. Dollar index, which was around 104.5, is currently at 103.5, and 10-year bond yield is also dropped to the levels of 3.60. And whenever we see some rally in crude prices, we see rally in the world markets as well as in the equity markets. So broadly, we are of the view that yesterday the market has formed a specific bottom at 18,460. So till the market is not breaking the same, we are going to see upward activity. That's the overall view. So we should be buyer at current levels, or if there is any correction, with a stop loss at 18,460. Again, we are expecting 18,670 or 700 on the higher side. As today all the technology stocks are doing well worldwide, we are of the view that we should look for adding some technology stocks, and in that we like Tech Mahindra, which is currently around 1120, 1125. There we feel that it is heading for the levels of 1160 or 1180. So it's a buy at current levels with a stop loss around 1090. And other stock which we like is Mahindra and Mahindra Finance. And here, if you see the pattern, then it is forming some interesting pattern. Most of the time, whenever the stock is correcting, it is not correcting more than 50% of the previous rally. So from here, the stock can go to the levels of 320 or 25. It's a buy around 295 with a stop loss around 290.
All right, got that. Mitesh, what are your stock ideas?
So I have M&M Finance on my list as well. From a trading point of view, 288 is the stop loss, 310 is the first target. Then a buy on Bharat Forge with a stop at 789 for targets of 820. And a buy on ICICI GI, which is ICICI Lombard General Insurance. That's a buy with a stop below 1200 for targets of around 1270. One sell called TVS Motors, keep a stop just about 1290, look for a decline to about levels of 1225.
That Mitesh and Srikanth, thank you very much for that. Appreciate it very much here on CNBC-TV18. We'll come back to you for more in just a bit. I want to ask about a few specific names as well. Manoj Muralidharan, Vice President Derivatives at Religate Broking, is now with us to tell us what the F&O data is looking like. Manoj, good to have you with us here. You know, last couple of days, the Nifty, Bank Nifty slumps in the last 30-40 minutes of trade. While the broader market is doing just fine, is this more to do with these weekly expiries that we've been seeing? And what's the setup this morning?
Good morning, Prashant. Prashant, ideally, if you just look back into 6 months, what happens is when you start a new series, the first week is a trending month and trending week, and the following 3 weeks are usually range bound, and then during the monthly expiry, you see the positional trend change. But then there are more cues to that. Interestingly, at least the FIs have been buying in the last 1.5-2 months, and the quantum has been more than 25,000 odd crores. So we believe that 2.36, there is a ratio analysis between the Bank Nifty and Nifty. It is currently at 2.36. So we believe that is a good support, and there is a possibility that we might see some traction coming. And obviously, we need us to say that banking and financial holds more than 30-35%. But then today, specifically, we believe that, there is a possibility stocks like Bazaar Auto and Tata Steel, this would be the two stocks that we believe can outperform the Nifty 50. So that would be the stock call for the day. Bazaar Auto with a target of around 47.40. We believe that the stock has good potential. Even yesterday, there was good buying. So 46.50 becomes a good level to go long with the stop loss of 4600. Tata Steel, interestingly, has a very strong support close to 104 to 105. So we expect the stock to take a support there, and the target and the upside can be somewhere close to 110. Prashant, now just to say, we are starting this weekly series, the 8th June expiry for the Nifty with almost 18,500 strike with the same amount of call and put options. So there is a possibility that the Nifty might be range bound, but I believe that intraday 18,560, this becomes a good level to go long, and the target can be again the same 18,640 to 660. The stop loss here should be 18,500 on the Nifty futures.
All right. Thanks a lot for that. Let's do one thing. Let's take a quick break. On the other side of the break, we'll have the pre-opening rates. We have also put behind us the auto sales numbers for the month of May. So Basudev Banerjee of ICICI Securities will be joining in to talk about those numbers and how to approach auto stocks in just a bit.